Thank you, SOSV. I'm Allie, Garfinkle, and I am so excited to be here. Emmanuel, Scott, Katie, I am thrilled to be here with you.
Great to be here as well.
Hi, Allie.
Great to be here.
I'd love to ask all of you, what stage are you investing at and what are you looking for? Emmanuel, start us off.
Look, at KKR with this, the new climate strategy that we are launching now, we try to address the missing middle, right? So in private capital deployment, there's a lot of money going to traditional renewables, usually addressed by large infrastructure funds. And then you have climate tech with a very rich and vibrant ecosystem of early stage investors. Now, when companies graduate from that ecosystem, they usually start needing a lot of capital. So this is where we think KKR can be relevant.
What about you, Katie?
I invest early stage, so I run the Engine Ventures, and we look for breakthrough technology where much of the science has been proven, but you have to scale up. And we look at all forms of climate and adaptation, mitigation, power, decarb, etc. So many areas. So seed through the B round.
Scott.
Yeah, Decarbonization Partners is a joint venture between BlackRock and Temasek, focused on late venture and early growth stage investments in companies with proven technology and what we like to call desperate customers for solutions and technologies that are helping to decarbonize the global economy.
It's not a secret, but there's been a slowdown in climate tech investing. How are you navigating the slowdown? Emmanuel, I'd love for you to start.
Well, frankly speaking, we don't really see a slowdown because at KKR, what we try to do is to precisely add to the capital formation stack what is probably missing and what has triggered the slowdown. That is, when companies graduate from climate tech, from clean tech, because climate is inherently capital intensive, you have to use a different recipe than the one you would use in SaaS or in anything that is asset light or pure tech. You have to put a lot of capital. And this is what was missing. This is what we are doing. So actually for us, we see kind of an acceleration because the companies which are graduating from that climate tech, and now a lot of those are actually coming to us.
What about you, Katie? Do you see a slowdown or an acceleration?
I mean, I think it is a story of have and have nots. I do very early stage investing, right? Seed through really the B round. And you certainly saw a little bit of a slowdown as everyone is trying to figure out how do we value these things. But many things are accelerating. And the rate of change and invention that we see has not slowed down at all. So depends what you're talking about.
What about you, Scott?
Yeah, I would agree exactly with Katie. I think it's increasingly a bifurcated market with companies that have still attractive value propositions and strong investor bases where, maybe it's taking them a little bit longer to get to their next major milestone and they're kind of weathering through this period. But, it is tougher for some other businesses out there. But I think we're definitely still seeing the quality companies continue to get funded, and frankly, those rounds still be competitive at that. So I think there's certainly very strong bright spots amongst the broader market backdrop.
I'd love to dig into this point about this sort of bifurcating market because we're seeing it all over in venture and growth stage investing. What are some recent examples of companies that you all have invested in that you think are sort of beating the trend or on trend, depending on what you see when you look at the data?
Wait, Allie, before we start there, let me just say, this is how venture works. Some make it, some don't. We always run it as a new story. It's not a new story at all. You start from seed all the way through public companies. There are cliffs in every single stage, and that is the form of capitalism we run. And so, nothing has really changed there. I think what is really interesting in this form of energy transition, or however you want to dub this, adaptation, there's all different forms of kind of climate investing. But I think what's changed so rapidly is we all have a much firmer grasp on what it will take to be a global company, because we've seen multiple rounds of this, and like what it actually takes on margins, on growth, on, your techno-economics. I think that's the really interesting moment we have. And every time we lose grasp of those set of variables, we get ourselves in trouble, and a bunch of stupid companies get funded and then they fall apart. Like, that's just what happens. And, so you're just going to see that and you see it in every form of tech. This isn't different for climate. It's just that it's more capital intensive than others.
Just 3 points to reinforce what Katie just said. So first, in this sector, like in every other sector, it takes time to go from the very early stages to really graduate from the VC and growth equity landscape, right? And overnight success usually has been 7 or 8 years in the making, right? And there's no exception. It's not different here. It's not longer or shorter here. It's just the same. 7 years is usually what it takes to figure out that, this is a thing that's new. No, it's been in the making for 7 years. So that's point one. Point two, I think in this second wave of innovation around climate tech, the one that we saw from 2019 to 2021, there was a lot of enthusiasm. There was a lot of ambitions. It's hard. It's about science. It's about industrialization. It's about rethinking and redesigning supply chains for energy, for transportation, for food, for buildings, for heavy industry. It's hard. So and science and the reality of large scale manufacturing or infrastructure, pretty stable. So that's the second point. It's hard. So yeah. So it's normal that we have that bifurcation on that halves and half dot, because some people do it better than others at that game of applying science and industrialization practice or scale up, and whereas others are probably less skilled at this. And then the third thing, and this is the difference between this sector and I would say the last 35 years of tech we've been used to, this is not a world where an entrepreneur can say, I've done my series D or F, I'm cash flow positive, don't need to raise money anymore, next stage, the IPO. That doesn't work like this here. That story works in asset light, when scaling up doesn't require meaningful amounts of capital, which is the case in SaaS, in artificial intelligence, in everything tech. Here, usually when you get to that point, you've done your Series F, you're cash flow positive, you probably need a couple of billions to continue. And that cash flow that's trickling down your bottom line is not going to give you those 2 billions, at least not for the next 25 years. So you need to continue raising money, but a bit more thoughtfully, a bit differently than what you were doing. And there are a few examples of companies who come to that stage, understand that they still have to raise money, but they still try to do it the same way they were doing it in their Series A. This is where there's a bit of a mismatch sometimes.
I am still going to make you all tell me about a recent investment, and I don't know if any. Don't worry, I haven't forgotten. And to be clear, I don't think anyone would argue that the roller coaster, the booms and busts, the bifurcation is I think it's a feature rather than a bug. What are going to be some of the characteristics of companies that make it through this period, do you think, in climate tech?
I think, it's all really about execution and discipline. These companies, they've grown up again in an environment where cash didn't have a significant cost to it. And so growth was often prioritized at the expense of, taking very deliberate steps and proving something works at a particular scale before moving on to the next. And so I think those companies that can really just show that they're operationally excellent and hit their milestones using the cash that they said it would take them to get to those milestones, those are going to be the ones that ultimately are able to raise financing and build successful and scalable businesses.
The other thing I would add to this is that, again, we have to move away from I don't know, the happy dream or what worked well in asset light and tech. This is different. This is about creating infrastructure and large scale manufacturing. So going public, there's nothing magic about it. It's actually, in most cases, it's actually a very bad idea. And it's very hard, right? So in climate tech, yeah, there is one Tesla, there is one Rivian. That's it. And I'm not sure there is space for anyone else. But going public and look at what those two companies have gone through, and they are not completely out of the woods, especially for Rivian. They will be successful for sure, but there's nothing magic about doing an IPO. Going public, the public equity is probably the most risk averse, the most volatile, the most impatient type of capital you can get when you're in that stage. So staying private for longer, assuming that maybe your final exit at several billions is going to be selling to a corporate or being in an infrastructure fund. There's no shame about this. So there's also that thing that people have to realize, and that will be different. If you're making components for batteries, if you're making hydrogen, if you're making, if you're doing carbon credits, things, doing an IPO is probably a really bad idea, at least in the next 15 years. Private capital is going to be there to support you for a longer period of time, and you can probably make better returns, have more patient capital than if you try to do public. Yeah, you won't be ringing the bell on Wall Street, but that's something else. If it's about the ego of the CEO, that's a different story.
Yeah, I would just add, Alexandra, that there are many forms of capital, right? There's private equity capital. There are very long-term pools of capital, whether it's sovereign or family offices that want to see compounding value creation over a long period of time. So the public markets aren't always the best place for that. And I think if you're the entrepreneur, you have to be incredibly, you have to understand what that will mean, right? We had this whole era of the SPAC, which we're going to argue for a long time, was that good or bad? There were certainly winners and losers in that. Some people got capital, but put a lot of pressure on themselves to be public, and some of those went really, really badly. I don't think we're going to see a resurgence of that anytime soon, but I think there are multiple ways to run this, and sometimes being a public company is the right thing if you have very steady offtake agreements and lots of them, very diverse. Maybe that is a good that is good, and your margins are good. You know, being a public company might be the right thing. It might not be. So I think it is. There's not one use case for all of this, and I think the diversity of capital is the most important thing, with different ways to think about it and different ways to grow the company in the future.
What about for you, Scott? Where do you sort of stand on what exits can look like in climate tech?
I think companies that are ultimately able to put themselves in a position where they have optionality and can, as much as possible, control their own destiny, meaning if they're in a position where they're profitable and have good ability to forecast, they might decide an IPO is the right path, or they might decide that staying private is the right path. And so ultimately, I think not kind of tying yourself to this is the only scenario that can potentially work for us, and we're going to do an IPO or die trying. I think ultimately that's what we seek to find in all of our portfolio companies, and how we think about positioning themselves. I think, to Emmanuel's point, staying private offers a lot of advantages, and many companies don't realize just how intense the scrutiny and the quarterly reporting cycle and all of the regulatory burden becomes once you become public. And so it's hard to go back from there if you take that step. So I think companies certainly should seek to stay private for as long as they can before it becomes untenable for whatever reason. And you have examples of companies that are worth hundreds of billions of dollars today that are still private.
I'd love to get specific about sectors with you all. What sectors to you all right now look the most promising?
Well, for us, again, we come when growth equity cannot follow anymore, where it's becoming too big for growth equity, and where yet it's still too early for infrastructure or for other forms of capital, right? So it's a mix of risk appetite for growth, but with very large equity commitments, like in several hundreds of millions and sometimes in billions. So when you reach that point, there's no technology risk anymore. Business models are proven. There's visibility to cash flows. There's real assets. There's some form of downside protection somewhere. So you start thinking a bit like an infrastructure investor, even though it's not completely infrastructure. So if you look at the categories in climate, which are at that stage right now, I would say there's everything batteries. Deploying batteries on the grid with a high penetration of renewables, making batteries for electric vehicles, manufacturing batteries, and the supply chain from mining to cell makers, EV charging infrastructure, some applications of green molecules, green steel, green ammonia, displacing gray hydrogen, replacing it by green hydrogen in refining and other chemical processes. This is what we are focusing on because all those categories are in that stage of maturity and that stage of need of capital, right? So I think the thing we are doing the most these days, for instance, is fleet electrification, a bit everywhere in the world, right? The economics are really good. It's just about spinning a model that has proven that is stable and can grow, and where you can really create a very strong alpha just by transitioning a fleet of diesel vehicles to electric. And things like this. Now, the logic of what we do is that there are other things which are still in earlier stage, and this is why with Decarb partners, for instance, we interact all the time, because whatever they're working on today is going to come to this zone in 2 or 3 years from now, and so let's say that their winners are going. So we're downstream to them, right? So that's so this is why we're focusing on those sectors because of the nature of our investment mandate.
And that's a nice segue, I think, into our strategy because, we were investing in battery materials, battery manufacturing technologies 1 to 2 years ago. And I think they are starting to move into that phase where, as Emmanuel made sense, they're starting to look more like infrastructure. They're maybe still on that edge, but, the technologies are de-risked, the market is there. And really now it's more about a scaling game. And, one other sector I'm very excited about right now, I think, probably because of the work that funds like Katie's have done in de-risking technologies and getting them up the adoption curve is industrial decarbonization. We're seeing, a lot of really interesting solutions in what's conventionally thought of as a hard to decarbonize sector where, some of them, we have an investment in Tora Energy, for example, which is leveraging the great growth in wind and solar to decarbonize industrial facilities with renewable energy that would otherwise go to waste. We have another portfolio company that's, leveraging all the great advancements in AI to reduce energy use in factories called Guidewheel. And so we think that there's a lot of actually easier than people think areas of industrial production that we can decarbonize with solutions that are ready to be scaled right now. And hopefully in a year or two, they'll be ready to move into Emmanuel's wheelhouse.
Do you want me to answer that too, Alexandra?
I do. I absolutely love that. Go ahead.
Yes. So there's, since I play earlier, I think there's some really interesting things coming down in new energy generation that are going to be large, clean, firm power that are going to be super interesting, whether it is nuclear, whether it's fusion, whether it's very large, large scale, deep geothermal. All those are coming. And these guys, I think, are going to love those investments when they do, because long offtake agreements and stability. That they're also, I think, will appeal to anyone who's in the White House for obvious reasons of geopolitical stability. Then I think all the decarb stuff of heavy industry, new forms of fuel. I mean, these all are breakthrough areas that I think are, in Emmanuel's 7 to 9 year cycle, we're 4 or 5 years into those things. So there's going to be some really good stuff there. And then I would say in all of the built environment, things like HVAC, heat, large industrial heat pumps, all those things are really coming. And if you look at, how much temperature is going to rise, those are going to be a real necessity. I could go on for like an hour, so I'll shut up there. But I think there are so many interesting things. Not all of them will get to the point where we think they should scale and have the ability to do that, but a bunch will. And so this force of good in climate, I think, has a very long life cycle.
And the thing I think what that says is that, so basically to decarbonize the economy, you need 12, 15 technologies, right? So, and as they mature and they go through the funnel of early stage, late stage, growth equity, pre-infra and full infra. So that's, we are building, all of us, that conveyor belt, if you will, right? So because today out of those 12 or 15 technologies, there is one that is in the money, that is fully mature, that's solar. So solar photovoltaic, super mature, probably more than $300 billion of dry powder in many infrastructure funds, and infrastructure funds love that. Okay, so mature, done. The next thing that's probably going to go that way is what I was saying, so everything batteries, electric vehicle, making batteries and all that. So all that stuff will probably end up in infrastructure funds in 10 years from now or less than this. And then the rest is coming, right? So you have that notion of conveyor belt that Katie, Scott, and I are working. And then at each time, so as those technologies mature and grow, well, we pick them up and then we deliver them to the next stage.
We're coming down the pike here, but in proof that I won't let anything go, I'd love to hear about a recent investment from each of you really quickly, just a couple of sentences about why you made it and why you're excited about it. Who should I pick on first? Scott, you were just talking. Tell me about one recent investment that you really think represents where climate tech is headed.
We recently invested in a Swiss company called Neustark, which is a carbon dioxide logistics and sequestration platform that helps connect small-scale sources of CO2 emissions with concrete recyclers to permanently sequester the CO2 in that concrete using their proprietary mineralization equipment. And it's really just a fantastic value proposition for these small sources of CO2 like biogas plants who don't otherwise have any way of getting value for that CO2. And it allows these concrete recyclers to actually improve their margins meaningfully in what's a low margin business. And ultimately, one of the most scaled solutions globally in terms of actually delivering sequestered emissions and delivering carbon credits with companies like Microsoft and UBS as customers. So that's a recent one that we're very excited about.
Emmanuel?
I would mention Zenobē. So Zenobē is a British company that does fleet electrification. So we're electrifying mass transit buses in London and other large British cities. When you have to transition your fleet of buses or delivery trucks or school buses, it's hard. It's not just removing a diesel vehicle, putting an electric one, a charger on the wall, and off you go. You have to strategize properly. You have to understand which line you're going to transition first. You have to size properly the battery that you're going to use for that vehicle. If your vehicle is going for 200 miles per day, don't put a 400-mile battery on it. And then you have to build the charging infrastructure. And guess what? You're in an urban environment. There is never enough power on the grid to charge all the vehicles you need to charge at the same time. So what we do with Zenobē, we just solve all that problem for the bus operators in London, in other cities, by telling them, look, you're going to have your 200 buses fully charged, ready to go every morning. We take care of all the rest. and it's going to cost you less than running a diesel fleet, because now everybody knows that the total cost of ownership of an electric fleet is lower than the one of a diesel fleet. You just have to organize the economics and the business model properly to do it. So we are very excited about this. That company started in London, in other cities. Now we are launching it in Australia, in Belgium, and starting to tackle probably the most important problem in fleet electrification in the US, which are school buses. Right, 600,000 school buses in the US. Not many of them are electric yet. So really, really like this, and really, really excited about the growth prospects of that business.
We're just about at time. So Katie, I'm going to give you the final word. You can tell us about a portfolio company, or I'll let you off the hook if there's a message you'd like to leave our audience with.
I would just say, I mean, I could give you a whole bunch. I mean, I'm an early stage investor, so we do 8 to 10 investments a year, and there is so many exciting things coming down the pike. And but I'm so happy to have had this conversation, because I think there is a very thoughtful later stage investment community that we just sometimes talk past each other. And when we actually sit down and listen, I think we all share this excitement for what's coming and what is true energy transition. So thank you so much for having me.
Thank you so much. Thank you all for doing this.
Thank you for having me.
Thank you, Allie. Thanks, everyone.
Thank you.